My insurance company rejected my risk model. 3 years later, a hurricane proved I was right. The first time I warned the board, they smiled politely. The second time, they stopped inviting me to strategy meetings. The third time, they eliminated my entire department. My name is Ryan Mitchell. For 14 years, I worked as a catastrophe risk analyst for one of the largest insurance companies in the United States. Most people think insurance companies sell policies. They don't. They sell predictions. Every premium, every policy, every billion-dollar decision begins with one question. How likely is tomorrow to look like yesterday? That was my job. I studied hurricanes, wildfires, floods, severe storms, supply chain disruptions, and the financial impact of disasters. Not after they happened. Before they happened. The better we predicted risk, the more stable the company became. For years, our models worked. Then the weather changed. Storms grew more unpredictable. Wildfires spread into regions previously considered low risk. Floods appeared in places that had never flooded before. Historic averages stopped making sense. Most executives believed the solution was simple. Update the numbers. I believe the problem ran much deeper. Historical data alone could no longer explain the future. So I built something different. An AI platform capable of combining satellite imagery, climate patterns, infrastructure data, insurance claims, power grid information, and real-time weather forecasts. It didn't just estimate losses. It continuously recalculated risk as conditions changed. If a major storm shifted 20 miles overnight, the model adjusted immediately. The system wasn't perfect. No model ever is. But it consistently outperformed every legacy tool we tested. I called it Horizon. The board called it expensive. During the final presentation, one director leaned back in his chair. Ryan, we've been profitable for decades. We don't need to reinvent the business. Another executive added. Our shareholders expect stability, not experiments. I left the meeting knowing exactly what would happen. 3 weeks later, the project was cancelled. 6 months after that, my position no longer existed. I packed my office into 2 cardboard boxes. No farewell speech. No celebration. Just 14 years reduced to a security badge that no longer opened the front door. Driving home that evening, I realized something. If the insurance industry refused to prepare for tomorrow, someone else would. I mortgaged my house, sold nearly every investment I owned, and founded a company called Horizon Analytics. Most investors rejected us. One venture capitalist laughed when I explained the business. You want insurance companies to pay more money to avoid losing money. He shook his head. They'll never do it. Maybe he was right. At least, for a while. Then a mid-size regional insurer agreed to test our platform. Not because they believed in AI. Because they couldn't afford another bad hurricane season. 3 months later, our model recommended reducing exposure in one coastal county and expanding coverage inland. Executives hesitated. Then they followed the recommendation. That hurricane season became one of the most destructive in years. Their competitors suffered enormous losses. Our client remained profitable. Everything changed after that. Within 2 years, Horizon Analytics was advising insurers, reinsurers, banks, infrastructure investors, and real estate developers across North America. Our software didn't simply predict disasters. It helped businesses decide where to build, where to invest, and where to insure. The world's largest reinsurance firms began requesting private demonstrations. Wall Street noticed. So did my former employer. One Monday morning, an email arrived. The subject line contained only 4 words. We should talk again. It came from the same CEO who approved the meeting that ended my career. 3 years earlier, he believed Horizon was unnecessary. Now, he wanted to discuss a partnership. I accepted. Not because I trusted him. Because I wanted to understand what had changed. As I walked back into the headquarters I once called home, I noticed something different. The marble lobby looked the same. The executive offices looked the same. But the people looked worried. Very worried. And before the meeting was over, I would discover that the company hadn't invited me back to buy my software. They wanted help solving a problem so large. It threatened the future of the entire insurance industry. The conference room hadn't changed. The same polished table. The same skyline overlooking downtown Chicago. Even the coffee tasted exactly the way I remembered. Only the people were different. 3 years earlier, they spoke with confidence. Now, they spoke carefully. The CEO entered carrying a thin black folder. No assistants. No legal team. That alone told me the situation was serious. Ryan. It's good to see you again. I nodded politely. You said you needed help. He didn't waste time. He opened the folder and pushed several financial reports across the table. At first, nothing seemed unusual. Revenue remained strong. Premium income had increased. Customer growth exceeded expectations. Then I reached the final page. Projected catastrophe losses. I looked up. These numbers can't be right. The CEO sighed. I wish they weren't. According to their internal forecasts, the company faced the largest insured loss in its history. Not because of one hurricane. Not because of one wildfire. Because multiple disasters were beginning to happen in the same year. Events once considered independent were becoming connected. A hurricane disrupted fuel supplies. Weeks later, extreme heat overloaded power grids. The following month, wildfires destroyed transmission infrastructure. Then flooding interrupted manufacturing. Each event amplified the next. The old models treated every disaster separately. Reality no longer did. That was exactly the problem Horizon had been built to solve. So you want to license our platform? The CEO hesitated. No. He folded his hands. We want to buy your company. I almost laughed. 3 years ago they wouldn't spend $5 million funding Horizon. Now they wanted to acquire the entire business. For how much? He named the number. $4.8 billion. The room remained silent. It was an extraordinary offer. Yet something felt wrong. Companies don't spend billions because they're curious. They spend billions because they're afraid. What aren't you telling me? The CEO looked toward the window before answering. Our biggest problem isn't weather. I frowned. Then what is it? He turned another page. Reinsurance. Every major insurer depends on reinsurance companies to absorb catastrophic losses. Without them, one bad season could bankrupt an insurance carrier. For decades, the system worked. Now it was beginning to crack. Several global reinsurers were reducing exposure. Others dramatically increased prices. Some quietly stopped renewing contracts altogether. If the trend continued, insurance premiums across America could rise sharply. Entire regions might struggle to obtain affordable coverage. This wasn't just an insurance problem. Banks required insurance before issuing mortgages. Developers needed insurance before building apartments. Manufacturers required insurance before opening factories. Without affordable coverage, economic growth itself slowed. I understood immediately. Horizon wasn't valuable because we predicted storms. We predicted financial consequences. That difference changed everything. Then the CEO said something unexpected. We're not the only company talking to you. I know. He nodded. You should know why. He slid one final document toward me. A list of acquisition offers. 8 companies. 3 investment banks. 2 global reinsurers. 1 private equity consortium. And 1 company I had never heard of. Northstar Risk Holdings. No website. No annual report. No public executives. Only an address in Delaware. I looked up. Who are they? We've been trying to find out. According to his investigators, Northstar had quietly purchased minority stakes in dozens of insurance technology firms during the previous 6 years. Never controlling ownership. Never attracting attention. Just enough to influence decisions. The pattern felt strangely familiar. Not illegal. Not obvious. But highly intentional. What did they want? The CEO answered softly. They're buying data. Not office buildings. Not insurance companies. Not software. Data. Claims history. Weather patterns. Property values. Construction costs. Medical expenses. Supply chain disruptions. Billions of individual data points. Whoever controlled the world's largest insurance datasets could price risk more accurately than anyone else. And in insurance, better pricing becomes an enormous competitive advantage. As our meeting ended, the CEO stopped me at the door. Ryan, if Northstar contacts you, be careful. I smiled politely. They already have. His expression changed instantly. When? This morning. I showed him the email. It contained only one sentence. The future doesn't belong to the companies that insure risk. It belongs to the companies that understand it. No signature. No logo. Only an encrypted contact address. Driving back to Horizon headquarters, I couldn't stop thinking about Northstar. Nobody knew who owned it. Nobody knew where its money came from. Yet somehow, it always appeared before the biggest changes in the industry. Late that evening, my head of data science knocked on my office door. You need to see this. She projected a map onto the conference room wall. Thousands of tiny blue dots covered the United States. Insurance claims. Property records. Infrastructure investments. Weather stations. Power grids. cell towers, shipping routes. Everything was connected. Then she pressed one button. The blue dots turned into a network. The pattern looked astonishingly organized. Certain counties glowed brighter than others. What am I looking at? She zoomed in. Our AI found something. The places receiving the largest infrastructure investments. She paused. Are the same places where Northstar has quietly purchased insurance data companies. I felt a chill. They're not reacting to growth. She nodded. They're predicting where growth will happen before anyone else. Silence filled the room. Then my chief financial officer entered carrying breaking news. One of the world's largest global reinsurers had just announced an emergency strategy review. Its shares dropped nearly 12% in after-hours trading. Markets reacted immediately. Insurance stocks fell. Real estate investment trusts declined. Construction companies followed. Billions of dollars disappeared from the market in less than an hour. My phone vibrated. Unknown number. I answered. A calm voice spoke. Mr. Mitchell. Who's this? You've spent years predicting storms. A brief pause. But you've been studying the wrong forecast. I stood slowly. What forecast? The next crisis won't begin with the weather. It will begin with the insurance market. The caller disconnected. I stared out the window as the city lights reflected against the glass. For years I believed my company was helping insurers prepare for natural disasters. Now it appeared someone else was preparing for something much larger. Not a hurricane. Not a wildfire. A financial storm powerful enough to reshape an entire industry. I replayed the phone call 3 times. The voice never raised its volume. Never sounded rushed. Whoever called wasn't trying to threaten me. They wanted me to notice something. The next crisis won't begin with the insurance market. For the first time in years, I ignored the weather models. Instead, I opened financial data. Commercial real estate. Regional banks. Mortgage-backed securities. Municipal bonds. Power infrastructure. Construction lending. At first, nothing looked unusual. Then our AI highlighted one statistic. Insurance premiums for large commercial properties had increased nearly 70% in only 3 years. Not everywhere. Only in strategic locations. Data centers. Advanced manufacturing plants. Semiconductor facilities. Pharmaceutical campuses. Critical logistics hubs. Exactly the industries driving America's next wave of investment. My chief economist leaned forward. If this continues, projects stop. I nodded. Without insurance, banks wouldn't finance construction. Without financing, factories wouldn't be built. Without factories, supply chains would tighten again. The economy didn't simply depend on capital. It depended on risk being insurable. That afternoon, Horizon's analytics platform detected another anomaly. 3 regional insurance companies had simultaneously stopped writing new commercial policies in Texas. Hours later, 2 more carriers suspended new business in Florida. Then another in Louisiana. The announcements were small. Almost invisible. Financial news barely mentioned them. But our AI recognized the pattern immediately. Capacity was disappearing. Not because companies lacked money. Because they no longer understood the risk. That evening, we held an emergency meeting. Around the table sat engineers, economists, catastrophe modelers, and former insurance executives. Everyone had the same question. What were we missing? Then Maya, our youngest data scientist, quietly raised her hand. I think we're looking at the wrong customer. Everyone turned toward her. What do you mean? She projected a different chart. Instead of insurance companies, she mapped corporate construction permits. Something remarkable appeared. Over the previous 18 months, several multinational corporations had delayed billions of dollars in expansion projects. Officially, they blamed higher interest rates. But that wasn't the whole story. Every delayed project had one thing in common. Insurance approval had taken far longer than expected. Factories, battery plants, AI research campuses, distribution centers. Without insurance certificates, nothing moved forward. Maya looked around the room. The insurance market isn't following the economy. She paused. The economy is following the insurance market. Nobody spoke. Because everyone realized she was right. Insurance had quietly become the gatekeeper of economic growth. If someone could predict, or influence, that market, they could indirectly influence where billions of dollars were invested. The next morning, I received an invitation. No company logo. No signature. Only an address. A private conference center outside Denver. Against my legal team's advice, I went. The building resembled a luxury hotel more than a corporate office. Inside waited only one person. A woman in her early 50s. She introduced herself simply. My name is Claire. No last name. She smiled. You wouldn't recognize it. She already knew everything about Horizon. Our clients. Our models. Our expansion plans. Even conversations that had never been announced publicly. She wasn't guessing. She had information. You work for Northstar. She didn't confirm it. She didn't deny it. Instead, she asked a question. Ryan, why do you think investors care about insurance? I answered immediately. Because it protects assets. She gently shook her head. That's yesterday's answer. She walked toward a digital display. On the screen appeared photographs of AI campuses, semiconductor factories, ports, power stations, hospitals, and airports. Insurance doesn't protect these projects. She pointed to the images one by one. It decides whether they happen. She turned back toward me. Capital follows confidence. Confidence follows risk. And whoever understands risk first sees tomorrow before everyone else. For a moment, I understood exactly what Northstar had been doing. They weren't trying to dominate insurance. Insurance was only one source of information. Claims data revealed flooding before governments updated maps. Repair invoices revealed supply shortages before economists noticed inflation. Commercial policies revealed where companies planned to build years before construction began. Risk data wasn't just about disasters. It was an early signal for the future of the economy. Claire slid a thin folder across the table. Inside were satellite images, construction permits, utility applications, transportation studies. Everything pointed to one region of the country. The Midwest. I looked at her. What's special about this area? She answered quietly. The largest private manufacturing expansion in American history. No one is talking about it yet. They will. She stood. We're not inviting you to sell Horizon. We're inviting you to see what comes next. Before leaving, she gave me one final warning. When the headlines finally arrive. She paused. It will already be too late for your competitors. Back at Horizon headquarters, my team had uncovered another surprise. Our AI compared Northstar's historical investments against future economic development. The prediction accuracy exceeded 90%. Impossible. No ordinary investment firm achieved numbers like that. Then Maya noticed something hidden in the data. Northstar wasn't making predictions. It was collecting signals years before anyone else. Insurance filings, freight movements, electricity demand, water permits, warehouse occupancy, fiber optic construction. Individually, each signal meant almost nothing. Together, they revealed where America's next $1 trillion of investment would flow. The room became silent. My chief economist looked at me. They're not forecasting the economy. They're reading it before it happens. Before I could answer, every television in the office interrupted regular programming. Breaking news. A consortium led by several global insurers announced plans to create the largest private risk data exchange in history. Estimated value. Over $100 billion. My phone vibrated again. This time, the message contained only 7 words. Now you understand what we're really buying. I looked around the conference room. Nobody mentioned hurricanes anymore. Nobody talked about floods. Or wildfires. The conversation had changed. We weren't in the insurance business anymore. We were in the business of predicting the future. And suddenly, everyone wanted the same thing. The data that could see it first. The announcement changed everything. Within days, every major financial publication was asking the same question. Why would global insurers spend more than $100 billion on data? Most analysts believed it was about artificial intelligence. Some thought it was about automation. They were only seeing part of the picture. Data alone wasn't valuable. The ability to understand it before everyone else was. For nearly 2 weeks, Horizon's leadership team barely slept. Our engineers analyzed billions of records. Economists modeled future investment flows. Former insurance executives reviewed decades of regulatory changes. Slowly, one conclusion became impossible to ignore. The future of insurance wasn't selling more policies. It was helping businesses avoid catastrophic mistakes before they happened. That realization changed our strategy overnight. Instead of accepting acquisition offers, we announced something completely different. Horizon would become an independent risk intelligence platform. Insurance companies would remain clients. So would banks, real estate developers, infrastructure funds, manufacturing companies, energy providers, healthcare systems. If an organization made billion-dollar decisions based on risk, we wanted to help them make better ones. Some investors criticized the decision. They argued we were rejecting an easy exit. Maybe they were right. But building a lasting company had never been about finding the quickest payday. A week later, Claire called again. You've made your choice. I have. No acquisition. No. She laughed softly. I expected that. There was no anger in her voice. Only respect. Before ending the call, she said something I never forgot. The best founders don't build companies to be purchased. They build companies that change how industries think. Then she hung up. Several months later, federal regulators completed a broad review of the proposed private risk data exchange. The project moved forward, but under stricter transparency and governance rules designed to protect competition and customer privacy. The industry adapted. New standards emerged. More companies entered the market. Innovation accelerated. Competition became stronger, not weaker. That outcome benefited everyone. 1 year later, Horizon held its annual customer summit in Denver. The audience looked nothing like our first conference years earlier. Insurance executives sat beside bankers. Energy companies shared ideas with manufacturers. City planners compared notes with logistics firms. Different industries. One common challenge. Making better decisions in an increasingly uncertain world. When I stepped onto the stage, I didn't begin with charts or forecasts. I showed a photograph. It was the small office where Horizon started. Second-hand desks. Old computers. A whiteboard covered with handwritten equations. The room was quiet. 3 years ago, I said, people told us we were building software for insurance. I paused. They were wrong. We were building confidence. Without confidence, banks don't lend. Companies don't invest. Cities don't expand. Entrepreneurs don't take risks. Confidence is invisible. But it powers almost every major decision in the economy. The audience applauded, not because of the technology, but because they understood the idea. After the presentation, I walked through the exhibition hall. Young founders stopped to ask questions. One of them looked nervous. My investors keep telling me to sell. I smiled. What do you want? I want to build something that lasts. Then build it. Don't let someone else's timeline become yours. He thanked me and walked away. For a moment, I saw myself from years earlier, standing in front of a board that couldn't yet see the future I believed in. Late that evening, Maya joined me on the hotel terrace overlooking the city. She handed me a tablet. Our latest forecast. I expected another chart. Instead, it displayed a single sentence. The greatest business opportunities appear where uncertainty is highest. I smiled. Did the AI write that? She laughed. No, I did. We watched the lights of the city stretch toward the horizon. Somewhere below, millions of people were making decisions. Buying homes. Starting companies. Building factories. Investing in new ideas. None of them could predict the future with certainty. Neither could we. But they didn't need certainty. They needed better information. Better preparation. Better judgment. That was Horizon's real product. Not software. Not algorithms. Better decisions. A few weeks later, I received one final letter. No logo. No return address. Inside was a single handwritten note. You were never competing against us. You were helping create a better market. There was no signature. I never learned whether Claire truly worked for North Star or represented something larger. In the end, it didn't matter. Because I finally understood the lesson that had taken years to learn. Successful companies don't simply react to change. They help others navigate it. The board that once eliminated my department believed insurance was about minimizing losses. They weren't wrong. They were simply thinking too small. Insurance, at its best, isn't about fear. It's about giving people the confidence to build something worth protecting. And sometimes, the most valuable business in the world isn't the one that predicts the next storm. It's the one that helps everyone prepare for whatever comes after it. The end.